Welcome back to The High Rise, a laid back, data back conversation where we talk all things cannabis from US MSOs to Canadian LPs, products, and market analysis through the lens of data. My name is Cy Scott with Headset, and I am joined, as always, by Emily Paxia of Poseidon.
Hi, everyone. Welcome to the High Rise.
And today we have a very special guest with Dai Truong. Dai, welcome.
Hey, good to be on.
Yeah, really excited to have you here. Before we dive in to learn a bit more about Dai here, I do have to share a disclaimer. Presentations and public appearances content are informational and should not be considered as personalized investment advice or recommendations. The information discussed today represents Dai's own opinions and should not be regarded as a description of services provided by Arlington Capital Services LLC or its affiliate Arlington Capital Services LLC, member FINRA SIPC. So, with that out of the way, let's talk about your background, your entry into cannabis, and Arlington Capital Advisors and your role over there.
Yeah, definitely. So started my career out in investment banking. I was a part of the software and internet team at Merrill Lynch. So that was around the time Facebook, Zynga, LinkedIn, all those companies went public in the early 2010s. From there, went on to a pretty traditional path, went to venture capital afterwards, investing in early stage software and internet companies. That was at Austin Ventures in Austin, Texas, after which I had a chance to join Anheuser-Busch and help start up their corporate VC arm, ZX Ventures, which at the time in 2015 was just getting started, was looking at stuff going beyond beer and ancillary technology companies that could help with the beer business. So from there, we actually looked at CBD back in 2016, reconnected with another buddy who was a beverage investor, which ultimately he ended up going to MedMen. So he was talking to me in 2017 about MedMen, about joining and helping out. In 2018, I finally made the jump. I went to MedMen to help with the corporate VC arm and M&A and a strategy and a bunch of other things pretty much every 3 months. After which I went to Left Coast Ventures, which most people might know is the US assets of Tilray. So I was there for about a year and a half. A year ago, we completed a SPAC transaction with Kaliva, Rock Nation / Monogram to form the parent company. So I left in April and joined Arlington Capital Advisors, which at the time was looking for someone to head up the cannabis vertical. Our firm had really, strong ties in beverage and beer and restaurants and multi-unit retail. So cannabis was kind of the logical next extension in the vertical coverage.
Yeah, quite the background there. Lots of experience, lots of different types of experience, I guess, kind of, all over the board, different exposure. That's, interesting with the beverage alcohol. And it's something that we've talked about kind of recently, kind of coming from that world, Anheuser-Busch, ABI, and doing the alternative investments. We're seeing more and more of these, Canadian operators, buying beverage companies, looking at beverage companies. And it's quite, like with Tilray in particular, this idea that you can be like a cannabis company at the same time an alcohol company. And I know a lot of what they talk about is how they're going to leverage the alcohol infrastructure for cannabis beverages in the US one day. But I don't think it precludes like being kind of a hybrid company.
Yeah, and I think that's a Tilray strategy that's shifted in the last, call it 9 to 12 months. With I think a month ago they announced now being Tilray brands, right, and buying Sweetwater, which Arlington actually did represent that sell side. Sweetwater, which is a Georgia-based craft beer company that's very forward-thinking with some of their flavor profiles that's very closely associated with cannabis. They also bought a whiskey company in Colorado, I think a quarter ago. And then Erwin Simon, the current CEO, has a background in CPG at Hain Celestial. So I think, him being a part of the company and the strategy has kind of shifted towards being, and the messaging being this brand house.
Right. Yeah. And so, yeah, seeing brands like Sweetwater listed on Arlington Capital Advisors, I mean, it's a perfect overlap. And, having you there representing, looking at cannabis deals and having some experience in things like Sweetwater and other beverage alcohol, I expect we're going to see more and more of that. So it's pretty forward thinking of a group like Arlington to be tackling the space. Have you seen others out there that look like Arlington? Or are you guys very much a first mover? No one else is brave enough to enter this uncharted territory of cannabis?
Yeah, there's a few others that we actually compete with at the more the restaurant level. That's sort of jumped in. The way I kind of see it, you certainly have that beer beverage connection to cannabis. Our sort of restaurant connection, if you think about most of these successful restaurant businesses, they're franchisors, right? So that's something a Cookies is doing, a Fire and Flower is doing in Canada. So that and it's hospitality. So 3-5+ years down the line, if lounges become a big business, it kind of makes sense logically for some of the investment banks that are servicing some of those people. And some of those people are the high net worth individuals, the people with family offices that are, taking a bit more risk and putting money into cannabis. So it's been a logical extension for a few of our competitors as well.
Yeah, makes sense. I guess maybe we'll see more over the years ahead here. So outside of Arlington, you also run Highly Objective. And Highly Objective, for those that aren't subscribers, is a newsletter, but also now a podcast where you cover industry news, the latest and greatest. I read it every time it lands on my inbox, and I love how it's just kind of pushed right to me instead of trying to sift through. And I also really love, not just the headlines, but some of your analysis, where you're actually adding some context and some thoughts around, what you're seeing out there. So tell me a little bit more about Highly Objective and like how you started that and what your goals are with that platform.
Yeah, so that got started about 3 years ago. I was going to speak at South by Southwest 2019. They had the cannabis business track at the time. So as a way to kind of promote my session, make sure more people attended, since it was more off to the side versus the main interactive South by Southwest experience, it's more promotional. And then over time, more colleagues from MedMen got on the newsletter, and then it became an internal thing that I kept going after my time at MedMen into Left Coast. And I kind of look at it as, look, I'm paying attention to the news. I'm looking at all the deals anyways. I've, put in all the work. Why not synthesize it? Make sure I can save people time. And that's sort of the thinking there. And then with the podcast, we usually deep dive into a company, if it's raised funding, which pretty much every company has that's been on the podcast, go into that fundraising journey. And whether you're at the early stage and you're raising a few $1 million, growth stage, I think that journey and sort of how these founders think about the roadmap could be helpful, because there's just less resources for cannabis startups and founders here than tech startups.
Yeah, absolutely. And the in-person networking, that's a component of it, where I've seen gatherings in different cities in your newsletter where you're organizing people to come out and meet up. Kind of how does that program work? Is it just based around events, or are you just kind of looking at different cities that you might be at and just kind of pulling people in that community together?
Yeah, it's a chance for the subscribers, which I would say most of the subscribers are investors, executives, mid-level management, just, a chance to get together around some of these bigger industry events. Today it's still super nascent. So we have events like Hall of Flowers, MJ BizCon, South by Southwest. There's MJ Unpacked. Typically, these events are on the map for pretty much most people in cannabis. So they're usually also on the newsletter. So if I do a event, we'll get about 50 to 75 people that will show up. It's super easy for me to organize, just time, place. Either I will pick up the check, or Arlington will, or sometimes we'll co-sponsors with other companies. And it's just a great way for people to network in a very efficient way, right? You spend 3 hours and you hopefully meet 10 to 20 other people that also are in the business of cannabis.
Yeah, super smart, especially given how fragmented the industry is, and people in Denver, and don't overlap with maybe people in San Francisco or all over, and so kind of going to these different areas and hosting in-person events is pretty clever. And you definitely got to find sponsors. Long ago, I used to run this cannabis tech meetup in Seattle, and it was great. You just get a couple people to cover the wine and beer, which always helps bring more people out, and then you don't have to pay for it out of pocket, because that's always a pain.
Right, and that's the thing about the service providers, which Arlington Capital Advisors is one of those, right? If you're willing to bring people together, and for them it's a couple $100 or a few $1,000s to get this curated access to people, a law firm, a bank, whatever service provider, more than willing to pick up the tab.
How exclusive are these events? Is it just anybody that reads the newsletter can sign up? Do you have a limit on the number of people that can show up, or is it still pretty open right now?
Depending on where the event is, there is a cap. I did do an event at my suite during MJ BizCon in Vegas, and we had maybe 120 people come throughout. So
Wow.
the Bellagio was certainly not happy about that. So depending on where it is limited. But otherwise, we did one in Denver, kind of late November, early December. I spent the whole week there, and Monday night was more of an investor dinner plus some people that could stand to meet some of those people. So founders that were raising. So one of Emily's partners, Patrick Ria, who's based in that market, was actually also at the dinner. The next night, there's a event at Grasslands that was maybe 40 people. They were, concerned about Omicron and COVID at that time, because that was when Omicron was just picking up. So we kind of had everyone masked up, limited to about 40 people, which was comfortable for their space. That was just whoever signed up. And there were some co-hosts that sort of invited their list as well. So it was a very curated event. And usually it's casual, but that event actually, given all the M&A activity that was going on around that time, right? That was Pharma Can Live Well, that was Wana Canopy. We actually did breakout groups and spoke about the M&A activity and dove into the size of that market there.
Very cool. Very cool. So get in now, right before it's like MJ Biz where you have hundreds of people showing up and you're turned away at the door. So make sure you sign up. So for the newsletter and I guess the podcast as well that you're doing, how can people find Highly Objective?
Yeah, super easy. www.highlyobjective.com. Super easy for me. I host it on Substack, which is a platform for newsletters. So I don't put too much into it in terms of web design. It's not a business. It's sort of for me to stay connected with everyone in the industry. So it's more of a casual approach, right? So not high production like your podcast here, Sai and Emily, but gets the job done.
Yeah, well, I find your podcast, I love the guests that you have on there. And that's what matters, right? It's the conversation that you're having and access to those individuals. Do you find with the podcast is the goal to like highlight people in the industry that are doing deals that, Arlington might be covering or that you're covering in Highly Objective?
It's a combination of both. There are certain, call it earlier stage startups that might have raised less than $5 million that want to come onto the podcast, get a bit more exposure for what they're doing. So for example, I just spoke with Sean over at Pilgrim Soul. I think they've raised maybe $2-3 million, Merida being the main investor there. They've launched their product, mostly D2C in California. So Sean wanted to come on the podcast. I've known him from MedMen. He's an advisor to MedMen, Lowell, and then also Charlotte's Web. So, why don't you come on, talk about his company, which is pretty interesting. So Pilgrim Soul is a company. They've actually made way more money from non-cannabis items. They have this journal. It's $30. It's on Amazon. You're supposed to kind of be high and get super creative because a lot of the product center around creativity. So, smoke or however you consume. And once you're high, there's this activity book that he sells for $30 on Amazon and on his website where you can kind of jot down notes and creative inspirations. So someone like that, and it's public, he mentioned on the podcast, but he's made about $5 million from selling those journals at the beginning of 2020 till now. And in cannabis revenue, it's certainly less than $1 million today since they're just launching. So someone like that wants exposure, which I'm happy to kind of give to Sean and thankful he reached out for that exposure. Then there are folks who are much larger companies. We also had the Spring Big CEO come on and speak about their SPAC, which is still pending, kind of talk more in depth about Spring Big and sort of, that market and their opportunity. So across the gamut, startups to larger companies.
Very cool. Very cool. Yeah, so I encourage everyone to subscribe, to check it out. How often do you release the podcast? Is it every so often whenever you can get an interview, or is there like a cadence to them?
Weekly is sort of the cadence, which is the same with the newsletter. I'm mindful of not spamming people by doing it too often. And certainly if I am traveling like I was the past month, then it kind of slows down and I don't upload anything for 2 or 3 weeks.
Sure, makes sense. Same stuff happens here at the High Rise. Travel can get in the way, just the work balance there. But
well, you guys are really smart on the podcast. I just want to comment where you guys would do it poolside, right? I know there was a conference in Ojai. You guys would do it at Hall Flowers. So you guys are very smart about taking it on the road with you as well.
Yeah. I think, we're in February. I'm based in Seattle and the weather is terrible, right? So I think I need to prioritize more poolside sessions and just force the travel. Just find pools everywhere and see if people will come and do a session. We've done a couple poolsides. They're the best.
Well,
Yeah,
next
not
up
a
is
bad place.
Austin. Yeah.
Yeah, that's right. Next stop poolside will be Austin. We gotta
Which
find a
which
out
pool? Oh,
I think we
okay.
have a pool.
there. Oh, okay, cool. At the Airbnb. Awesome. Yeah, if there's a pool,
Nice.
we can do a podcast. That's all we need. So before we move off of Highly Objective, one thing I want to call it, one of your more recent newsletters had consensus predictions for 2022, where I think you pulled together different predictions that were out there. I thought when I read the list, I was like, if you took off that headline of like 2022 predictions and you replace it with 2021, it might look pretty similar. How do you feel about that? Do you think the same thing? Do you think 2022 is going to look a little like 2021? Do you think we might be surprised by something? How are you feeling about this year?
Yeah, and it's funny you made that observation. I totally agree when I was looking at all the predictions that people have put out for 2022. Unfortunately, in the environment we're in, things have moved a lot slower than we would have liked. I think a lot of it is, very local, very also national. So there's those two dynamics in terms of the election cycles that will certainly move topics, right? So we're forced into a cycle where on a national level, maybe every 2 years with either the previous presidential election or the midterms coming up this year in November, those are sort of the bigger, momentum drivers of some of these predictions. So I think certainly it's been much slower than we all predicted. I don't know if you two ever had when you first entered cannabis or even 5 years ago, a year for when federal legalization will happen. Now I've been in it for 4 years. I've kind of just stopped trying to figure out what that year is going to be. It's super hard to predict. I appreciate people like Emily and her firm Poseidon putting out these predictions. You kind of have to.
Yeah, well, yeah, I know that I believe Poseidon, you guys are close to at the government level, kind of trying to stay involved with those trends, like legalization trends.
Yeah, we get involved at that level, but I think sometimes for me when I make a prediction, it's because I'm trying to will something to happen. But now I'm kind of like in this interesting, bold commentary line where I'm like, nothing will happen and it doesn't matter. So we'll keep going.
Doesn't matter in a good way, right?
Yes.
Like, yeah.
Yes. It doesn't matter because we've built great businesses in spite of it. And maybe because of it, because, we always say that regulatory changes are a lever that you can pull to drive growth or to create a moat around a business. So it's an interesting place we sit in cannabis.
It certainly is. So we'll see how it goes this year, but I'm kind of feeling the same thing. And you're right, Dave. Like I stopped kind of worrying about what year. It's like, hopeful, of course, and love to see things like safe banking going through the House the sixth time, because it's an eventuality, of course. But Timothy, your point for sure. We're building a great industry here, and state by state, and kind of filling the gaps where we need to. Which is, I think, one of the news items from today. We can talk about kind of banking and support, and just as a good example of when we don't have federal change, companies kind of step in to fill that gap. But before we get into that, did you guys catch the Super Bowl yesterday?
I watched the halftime show.
Yeah. So Day, you're an LA guy, right? You're based in LA?
I used to be. Right now I'm in Pennsylvania, but my daughter was born in Santa Monica, so she's only 8 months old now, but I guess she's a Rams fan.
Yeah, very cool. Yeah, I'm from Southern California. We had the Rams when I was a kid, and then they disappeared off to St. Louis, and the Raiders as well. And so we had no team for a long time, but now they're back. It's funny. I saw this Conan bit. Did you guys catch this where he was talking about how he's in LA now and he's from Boston, and he's like, everyone in Boston, Red Sox are playing, you're decked out head to toe in gear, and in LA, like nobody, you wouldn't even know that there's a football team hardly. So maybe after the win yesterday, that may change. But I bring it up because of this news item here, the halftime show, which was pretty awesome. It was kind of the oldies of hip hop, which was cool, the classics. But you had Snoop Dogg and Dre and plenty of others, right? But the news items around Snoop lighting up prior to the show, right? Did you guys catch this?
Yeah. It certainly has had a lot of likes and retweets. So I think Snoop has been very smart about it. I don't think he found a way to promote it. I know it wasn't one of the building's names, but Snoop actually has something called the Snooper Market. So that's any sort of apparel that Snoop has worn and some of the design. One of the designs is that doggy style jacket that you might have seen on the cookies flower. But that's available on the Snooper Market. His outfit yesterday, which was Rams color, is available on the Snooper Market. So he certainly is great about promoting other interests.
Yeah, yeah, cannabis being one of them, right? So, I mean, California is the legal market. There's always the question of, I don't know, visibility and exposure for the industry. So just that headline kind of post show that he was consuming prior to the show. I'm surprised he wasn't in that set that they had, just kind of lighting up, sitting there. I thought for sure he would just do it. Like, who cares, right? He's Snoop. He can kind of do whatever. It's like a one-time thing, just like the Eminem thing, how he kneeled, and that obviously got a lot of media attention as well. And I had read somewhere that they didn't know, and then I read somewhere like the league knew all along. There's some drama, but sometimes that stuff, if they didn't know, just kind of doing it, I would have expected Snoop, to not say anything and maybe light up. It's like how Dave Chappelle will smoke cigarettes on stage, which I don't think is allowed, but he's like, I'm Dave Chappelle. I'm going to do what I want to do. And what are you going to do about it? Anyways, pretty interesting. But back onto like the real news, today there was some SPAC news. So Northern Lights Acquisition Corp, SPAC entered a business combination agreement with Safe Harbor Financial. And this is what I was kind of alluding to with this, banking regulations and challenges around banking and still, not having safe banking or any sort of, proper banking in the industry. And, Safe Harbor has a lot of clients, that they service. I think it's in their press release, they mentioned over 600 accounts across 20 states, processing over 11 billion in transactions, 4 billion in 2021. With a 73% compound annual growth rate. So they're doing a lot of business in banking support. What do you guys make of this SPAC headline here?
Yeah, I think it's a pretty interesting business opportunity, right? These guys are looking at, as you alluded to earlier, safe banking and seeing that it might not likely pass this year or maybe next year. And they see a huge opportunity to expand beyond Colorado. So in Colorado, they have $1.4 billion deposit, and this is from the deck that's filed with the SEC. But if you look at neighboring states, for example, California's about 250 million. Florida, I'm pointing out bigger markets, not just neighboring states. Florida's about 80 million in deposits. There's less than 1 million in Pennsylvania. So look, if they can replicate from a deposit standpoint what they've done in Colorado, I think that's a huge opportunity for the company and a huge opportunity to kind of get in there, get some of these MSO customers or just below MSO customers before some of the other bigger commercial banks get into it.
Interesting headline. Yeah, and good to see. I mean, the SPAC stuff, it seems to continue. I mean, we had Leafly, and we'll touch on that, Leafly going public here, and other SPACs on the way. So it's still going. Seems like it still has a little steam there, the SPAC market.
SPACs in general or in cannabis?
I don't know. I guess is it just in cannabis now, or is it everywhere? I mean, there was like I don't know, what, a year, 2 years ago, it was everywhere. But I feel like I haven't heard that many SPACs outside of cannabis lately, but I could just not be close to it.
There are still a lot of SPACs. They just have not found targets or have de-SPACed because the market got so bad. And there was also some really bad behavior on the part of the sponsors of a lot of SPACs, so that had to get cleaned up. But, I think the SPACs exist for sometimes easier and more cost-effective way to become a public company. It's kind of like a RTO, which is a reverse takeover in Canadian terms, or a reverse merger in US terms. And it kind of creates this opportunity to get a company public and to then use public currency to maybe do M&A or whatever. But, they've been useful for cannabis companies as a way to raise money to do it, which may not have worked in an IPO roadshow, et cetera, et cetera. So they exist, but I think there's a lot of caution around them. And I think SPACs have had a little bit of a history of a boom-bust cycle. And so they had been popular in the past, and then they kind of went away, and then we know they came back, and they were very useful in cannabis. I saw the news this morning that the Series SPAC, which had been slated to do a transaction with a U.S. private MSO, that deal busted. And
that was Parallel Soterra.
Yeah, that was Certera, also known as Parallel. But it was, that deal busted. And then now I just saw this morning that they're doing a deal with a space company, which we've seen prior to this actually with the Stable Road SPAC that was supposed to be a
Right.
cannabis SPAC.
A year ago, right?
Yeah, and so we've seen a number of these things happen where they just couldn't find an appropriate target. Sometimes in our industry, it's hard because of the long history of these companies and the ability to get them audited in time and to have banking support around that. So there are myriad issues around it, but it's it's one of those things, just like any other resource in the financial world, where it can be useful. It's just how it's applied, whether or not it's very successful. People may not realize at this point even that, for example, Air was a SPAC.
Or Columbia Care.
I mean, at this point, we know Air as a MSO and one of the top MSOs from a size perspective, and a pretty well-known team in the space. But it was a SPAC at one point. So
Even with like an Air and a Columbia Care, which went public via SPAC, they sort of struggled out the gate until they sort of got their narrative correct with investors, and I think they're still building upon that, which it's a great point you brought up. Leafly, that finally traded, I think, last Monday. So now I think we have about 6 days of trading data, and it's pretty much alternating between a red day and a green day. I think it could be down 5% and up 5% the next day. It's been that pattern for the last 6 trading days that we have history for. So at some point, I think people will need to better understand the story, better understand differentiation, probably see a few quarters of executions and beating numbers. And again, similar to the weed map story, I think once people see that stock will start to stabilize.
With Leafly in particular, did it 6 days? I know it's early, but like compared to like weed maps over the last 6 days, is it kind of the same thing? Are they just following just the market trends, up one day, down one day, or is it something kind of unique to Leafly, just kind of holding that average there?
Yeah, it's I'm looking at it right now. It's different from weed maps. Weed maps over the first 4 days of Leafly trading was all in the green, and then the last 2 days is taking a dive. So Friday that was down 7.5%. Today it's currently down 8%. So I think there's been some recent news that might have impacted that. I don't know if that's the weed maps cannabis marketing censorship spot that they had. I don't think that affected anything. In fact, that's the only notable company news over the past week.
Yeah, that you're referring to the broccoli ad that they produced. I think they posted on YouTube, right? It's like a 2-minute little thing about broccoli being a stand-in for cannabis in advertising. Is that was the joke, I guess?
Yeah, and that got a lot of attention from more so most of my LinkedIn network in cannabis marketing. You certainly hear the complaints of how tough it is to market cannabis brands, and Instagram's being shut down all the time, not being able to use really SEM. So that's definitely a complaint more on the cannabis marketing side of things.
Right, which I found interesting just because that's, I think a lot of Weedmap's revenue is from cannabis marketing, advertising your brands, getting in front of cannabis consumers. So if it does open up, I don't know what that means for Weedmaps. I know that they've moved into other areas of their business, but yeah, the marketing is a big piece. Just like I know with Leafly, it's a big piece. And you mentioned the narrative component. I think the press release when they went public, they talk a lot about the app and ordering through the app, which is a relatively new thing that Apple allows in legal markets. So it seems like that's more of the narrative is, hey, we're helping facilitate the transaction of cannabis, versus previously it's always been around finding a dispensary after you find kind of the strain that fits you. And dispensaries and retailers would pay a lot of money to be listed, and I think very similar to the Weed Maps model, but for sure they're all trying to kind of adapt to this new world here.
Yeah, I think the latest narrative on Leafly, just to wrap that up, is that they're trying to be the top of funnel, right, for all customers. So trying to be the place, I guess, through the app or the website where consumers start their purchasing journey.
Right, which makes sense. They've got a lot of information on strains, on products, a lot of, even for new consumers, information around like discovery, just understanding cannabis, understanding all the nuances of cannabis, so you can kind of learn about it and then connect the dots all the way down to that transaction at one point. Yeah, it seems like a good fit for them. It'll be interesting to see how it does, week 2 here and on, and if that narrative starts to kind of solidify and you're right, the quarterly performance, how they do. I'm sure every company that goes through this, in a lot of ways, I feel like being a public company is kind of two companies. You got the public share price that you got to keep talking about, press releases and what's great, what's new, what's exciting about the business, and actually running the business, on the other side, like keeping the lights on and running a successful business. So we'll see, hopefully they make that transition pretty seamlessly. So away from the public markets, I guess, and maybe into the private. This news from last week, I want to talk a bit about California M&A, particularly the Gold Flora and Airfield Supply Company purchase. So Airfield Supply, a large single store operator in San Jose, California, and does a sizable amount of revenue. I think they called that out in their press release that they may be, I think it was something around like arguably the largest, I think was the language they used, which is always interesting, arguably. But, a big footprint there, and Gold Flora coming in and acquiring them. And Gold Flora, has had a brand for a long time, a lot of packaged goods in the market. Does Gold Flora have a retail footprint?
I think they have one door. Yeah,
In Long Beach.
I was digging around more about the company just because I hadn't heard about it back in the day, and I knew that they were going for an ambitious cultivation and processing and manufacturing facility in Desert Hot Springs. In fact, originally they were going for over 600,000 square feet of cultivation and processing, which is pretty ambitious for indoor cultivation in this market. And anyway, I think they're more probably right now around, based on my intel, they're more around 120 to 140,000 square feet of cultivation. And they've got, as you pointed out, branded products that they have out in the market, and then one retail door. So it's not surprising that they went, when you're going through M&A in California, there's a lot of things that happen, and there's a lot of work that goes into, at least you want to get to an LOI. And then, because a lot of these operations have been around for multiple years, you have a lot to contemplate about previous potential ownership in these companies, any outstanding tax liabilities, anything around the license with a liability. And so the diligence on it, once you get to the LOI and then pass the LOI to definitives and to closing and then transferring of the license, there's a lot of work that happens. And those of us who've been spending time in the market, it's tough to do it under a certain dollar amount per door, because the juice just isn't worth the squeeze for how hard the effort is. It's hard if it's a $3 million door. It's hard if it's a $30+ million door. And so I don't blame Gold Flora for going for it. And especially if that store, San Jose market is amazingly interesting. It's the joke I always like when people are like, oh, your founders all get high all the time. I'm like, have you been to Silicon Valley? People in tech companies consume cannabis just like everybody else, as do people in finance, et cetera, et cetera. But I think that, there's a live and active consumer base in the San Jose general area and the peninsula of San Francisco as well. And so being able to pipe a pretty significant infrastructure and branded products through to a vertical of a shelf like that, that's a pretty good pipe. So I could see why they would go after that. But I'd known about other companies that have tried to acquire Airfield in the past for all stock. I don't know the exact terms of this structure of this transaction, but I was a little bit surprised to learn about it. But good for Gold Flora and good for Airfield for sure. It's a big deal.
Yeah, and Airfield has a couple private label brands, I think, that are only sold at their store. So maybe an opportunity for Gold Flora to take some of that and leverage their distribution, kind of their experience selling products into, retailers outside of that, you said the Long Beach location?
Yeah, they have one, which is King's Crew in Long Beach, and then there's actually two other dispensaries under the Higher Level brand, and that's in Hollister and Seaside, so smaller locations, and that's probably, sub 3 million like Emily was referencing. But yeah, they have Aviation and Jet Fuel as sort of their other two brands, so I would imagine either you replace those with Gold Flora, and they probably sell, given how dominant they are, being so closely located to the San Jose airport, you can just start selling Gold Flora instead of Aviation or Jet Fuel. Or if you really like those two brands, you can then, obviously take them to other dispensaries as well. They got a lot of indoor flower that they got to sell through.
So what does this mean for California? We talked a bit about the parent company at the top of the show, and Dane, your experience there. It's kind of doing the same thing, retail and kind of a CPG footprint. You've got Harborside, Unrivaled Brands. You think there's going to be more action like this happening in California here?
Yeah, I would say the appetite for M&A is pretty strong in California. Maybe not from the MSOs, but certainly from the single state operators operating in it today. I think some of the leaders in California, like you mentioned, Unrivaled or State House, they see an opportunity to sort of ramp up, scale up in the state and wait for maybe a buyout from the MSOs, because I think if you're going to be a dominant, top 5 company in cannabis in the future, you can't not have a big presence in California.
Right, right. What's the holdup with the MSOs? Is it just because the appetite for their model is so specific and it works in the markets that they're looking at to come into California is just a different mindset that they're just not ready for? Like, why haven't we seen one of these name brand MSOs kind of doing the same thing? Picking up a Gold Flora and an Airfield and starting kind of to build out that footprint.
So I think it's because if you look at their narrative, right, going back to the publicly traded, and Emily, please speak to this afterwards with your experience at Spark and AWH. But if you look at their narrative that they're telling investors, it's, hey, we have a footprint and we're building up a footprint in large limited license state, right? So that's a Pennsylvania, that's even like an Illinois where there's only a limited amount of licenses that will be awarded. California, even though I would argue is limited, there hasn't been much growth in terms of doors from 2018 till today, isn't considered a limited license state. So I think that plus a lot of the illicit market challenges. So anywhere from 75 to 80% of the market is considered illicit. We certainly have had a lot of smaller operators struggle in the state. I think it's not great for the MSO narrative to enter California today. And we've seen a few of them, Columbia Care, Jushi, Cresco Labs, make acquisitions, make an entry into California, but haven't done much recently.
Yeah, no, I think that's a spot on, makes sense.
Yeah, I think that's right. And I think you have to think about what their margins look like in the Eastern markets versus our margins in California, where it's more competitive. So I just think it's just the game they're playing right now is a little bit different than California, but they're all watching it. And the key is to build a fundamentally attractive business so that you can become a really interesting acquisition target for these groups.
Yeah. So one day we'll probably see some activity from the MSOs. So speaking of MSOs, while we're on it, another big headline from, I believe, last week, Verano acquired Goodness Growth, $400 million acquisition. I think in the press around this deal, they talked a lot about the New York, Minnesota, and New Mexico markets, which is pretty interesting. And I pulled some headset projection numbers for 2025 on this, and we have Minnesota at a $550 million market in 2025. And that's based on what we consider like a 50% probability of adult use. So kind of a coin toss that by 2025 you'll see some adult use cannabis there. And so it kind of discounts it. I think if we saw adult use happen today, we'd guess it'd probably be about $1 billion market by 2025. New Mexico, we think it's roughly around a $600 million market, just under that. And New York, we know is going to be an adult use, but it'll still, by 2025, be kind of rolling out. I think you're still going to see some slow rollout there. So we're expecting that to be about a $3 billion market by 2025. So pretty interesting. I think New York is the exciting one. What do you guys think about this deal and this transaction? I know, Dave, you had some comments in the newsletter kind of around the transaction structure.
Yeah, I think this is mostly all about New York as the main driver. If you look at some of the other competitors to Verano, they all have New York licenses. So it gives you sort of a speed to market once it opens up to adult use. Verano, as a top 5 MSO today, sort of needed to do this deal to kind of keep that footprint lead that they have on some of the tier 2 MSOs. And I just want to mention, Minnesota, GTI is the other competitor in that market. So today, they have, as a part of this acquisition, Verano will have 8 dispensaries. Your they use this in the press release. They probably should have used your numbers side, but your competitor predicts it's a $166 million market in 2026. So either they're less bullish on it, having that 50-50 in 2025, but based on the numbers used in this press release, I think it's more about New York.
Yeah. Yeah, certainly. And another interesting thing, well, first off, they should have used our numbers, so we'll have to talk to them about that. But another interesting thing is the stock versus cash. So it was an all stock transaction. Is that normal right now? It seems like we're always talking about these debt facilities that everyone's locking up for cash. What do you think about that?
So I think it depends really, case by case. So Verano did a deal in Arizona that was more heavily favored towards cash. That's a market where, look, anyone selling a dispensary today in a big metro will probably get heavy majority cash for that market. I think, on the flip side, Goodness Growth probably likes the story that Verano is telling. The markets they're in, they're very dominant in Pennsylvania. Obviously now they'll have New York, very dominant in Illinois. They have a 10 store location, which is a cap there. I mentioned Arizona, Florida, also 41 dispensaries there. So I think when a company takes an all-stock transaction, whoever the acquirer is, you have to believe in the story, the management, and the ability to execute. Because very easily, your $413 million in stock could get cut in half. So you have to be confident that whoever is acquiring the business can at least keep most of that value, which I think Goodness Growth probably saw that in Verano.
Yeah, makes sense. And then to the New York piece, how do you guys feel about, it's quite a hefty transaction for New York. We're all excited about New York, but new markets sometimes struggle to kind of get their feet under themselves and all sorts of challenges. This is a first mover type of situation, right? By getting these licenses and being able to go on the market. Do you guys think that being first mover is critical to ultimate success? Like, what do you tell the people that or those MSOs that aren't there? Are they just out of luck at this point?
I do happen to think that New York is going to be important. And if you're trying to be one of the top MSOs, I think Florida, similar market construct in terms of the launch, and people paid up for licenses in Florida. And at the time it seemed crazy. Like I remember licenses going for, I'm not kidding, $50 million. And it's hard to kind of realize that value, but the New York market is going to be so big. It is going to be so influential. And let's not forget that it sits right where the financial center of the U.S. is. So there's a lot of interest in the New York markets, and I think people will be looking to see who has a chess piece on the board in that market, and that those groups will get some good interest. So it's important. I do think people will be paying up for it on a multiples basis for what it could look like.
Yeah, and I think it's great that you bring up the value of a Florida license, because that's a little under what MedMen paid for it in 2018. I was also still surprised to see when Trulieve had to divest the Harvest Florida license. I think that's actually what Planet 13 picked it up for. So that market has really kept its value. It's not as limited as New York today, but certainly I think there's only about 30, 35 available in terms of those super licenses in the state. And then going back to New York and, speed to market here, I think when we look at infrastructure, and especially on the cultivation manufacturing side, that doesn't happen very quickly. So to have a license to start planning your infrastructure for New York State, it certainly helps to sort of get started ASAP on that.
Yeah, fair. Yeah, and fingers crossed. Really excited to see what that market looks like, I guess, next year at this point, and hopefully they hit that timeline. It seems like everything's slipping, like this New Jersey stuff. But yeah, I feel like they've had enough time. I know it's a big state, but pretty optimistic we'll see something 23 here. Well, I think that's a great point to wrap up on. Dai, thank you so much for joining us. Really excited to have you here. Obviously, I've known you for a while, but can't say how much of a fan I am of everything you're doing with Highly Objective and your analysis. I think you bring a lot of good to the industry, and definitely need more voices like yours out there to kind of help make sense of all this stuff. I feel like it's hard to keep on top of, like when I look at your newsletter and I think about what we talk about here on a week-to-week basis, like we cover maybe 5% of what's going on out there. And it's so hard to pick out like the best, they're all great stories, right? And so, the way you kind of capture that, I think is important. I encourage everyone to check it out and subscribe.
Thanks. I really appreciate that, and really, big fans of both what you guys do at Headset and Poseidon. Emily didn't talk too much about the portfolio, but I certainly know she has a lot of insights into California with Spark, and we didn't even touch upon it for New York, but one of her portfolio companies, AWH, is going through the whole MedMen lawsuit. So you guys both have a lot of insights as well. So really appreciate the time getting on the podcast.
Right on. We'll have to do it again sometime. Well, thanks for listening. If you're a fan of the podcast, be sure you subscribe and rate us. It definitely helps. And we'll see everybody soon.